There are certain times in the stock market when tickers are set up for a nice move higher and a pattern is repeating itself. The stock that I want to share with you today is in one of those situations where it is sitting on a key moving average, it is finding a bounce, and it is repeating something that happened back in April in towards the beginning of May, and it could be a tremendous opportunity for a move higher.
Tick by tick, the rhythm's wild.
What's going on, everyone? Jeremy Ritz here. Courage pays better than fear. Taking a look at the stock HIMS, HIMS, because it is repeating a pattern that it set up back in April. It's doing the same thing, and there could be a big opportunity here. You can see right now that HIMS dropped after it hit an interim high here, July 31st, and it found support off of this 200-day simple moving average. And you can see it has formed a double bottom, and now we are getting a bit of a move higher. And why this is significant is because if you come back to this past April when the market bottomed and it hit those lows on April 7th, we see a similar pattern. And notice that HIMS hit an all-time high of 73.05 on February 19th. And look what happened. This thing dropped. And it retested, bounced off of the 100 simple moving average, was rejected by the 50, and that's when it fell down to that 200. And notice, just like we have now, we had a lower low, higher low double bottom that was created here. Let me draw this out so that you're able to see it. Here's our lower low, higher low double bottom. And then that thing broke above the neckline, gapped up, a little retracement, and then pushed higher. This is important is because we are seeing that similar type of double bottom in current day. We hit an interim high of $70.60. It didn't get up to the all-time high of $73, so there's still more room to the upside here. And then on earnings, this sold down pretty significantly, cut through that 50 SMA, got a little support here on the 14th of August off of that 100, but then fell right through it. And it wasn't until it came down to that 200-day simple moving average where it found support. If we take a closer look at this pattern here, we have a double bottom pattern, a symmetrical double bottom. You could see that we did close above the neckline here on September 4th. That was Thursday of last week. And if we zoom into where we are today, we could see that we are now above that 100-day simple moving average, and that we wicked above the 50 earlier today where we were rejected and sold back down. Notice that that's right at the point of control here on the visible range volume profile. But why this is significant is because if we just go back here to April, we could see that while HIMS did shoot above that 100 and above that 50, it did retest before it went on a much larger run. And that retest wasn't very big. It was, let's see here, from the high to the low, $6.26. So let's just go ahead and measure that out here, $6.26. That would take us down to $45.50 if we were to get a similar type of retracement or pullback. But then from there, what happened? Look at this push higher. It made a move of, to this high, $34.32. So you could see the type of upside that is possible here. And again, the technicals, the charts, these moving averages leave behind clues that can tell us, hey, there's an opportunity here. And there's a couple other things that we want to keep in mind if we are going to take a trade. And that is these moving averages where we currently are. We could see that this 100 is acting as a bit of a form of resistance. And if we go back to last Friday, we could see that the price action pushed up into that 100, but was rejected, and we were left with a bit of a hammer candle, and that indicates buying pressure. And today we were able to push above that, but we still have that 50 sitting right here as resistance. It's holding this candle back, and it's going to have to break above it in order for it to run. But if we're just looking at this, we could see that there's nothing on the daily chart above that 50. Now, if we go over to the weekly chart, we could see that we are above all the moving averages here. We're sitting right on the point of control on the weekly. And if we go over to the monthly, we could see that we found a nice bottom here in August, and we are pushing up and retracing that August candle. So what we really want to watch is, how does this stock interact here with the 50? Does it get rejected further? Does it fall more? Or is it able to get a close above it? If we just look right now where we are, if we look at the visible range volume profile, we can see that there is some resistance here in terms of the volume node that we see to the right, this point of control, and it's going to have to get a push above that 50-59 area, and that's right around where that 50 SMA is. And if it can get above that and above $52, then it does have some space to push. But I wanted to share this with you because there is some opportunity for more upside on HIMS. This move isn't completely done. We're probably going to get a bit of a retracement here. If we're following the previous pattern that happened back here, April into the beginning of May, we might pull back about $6, and then from there it might reload and start to push higher. Where do you see HIMS heading here in the next few weeks? Do you think that this is a fake out and that 50 is going to reject it and it will come down and break through that 200 and drop further? Or do you think we'll get a little retracement and then blast out of here and make new all-time highs? I'd love to hear your thoughts down below in the comments. Drop those. And while you're at it, hit that subscribe button, and I will see you back here for the next video. Make it a great day.
Tick by tick, the fears erase.